Nurita binti Mokhtar, matrix number 291462.
My name is Fairuz binti Syaril, matrix numbers 291516.
Hi and Assalamualaikum. My name is Wan Aisyah Samiha binti Wan Suhaili and my matrix number is 291420.
My name is Siti Nur Suzaimah binti Abdul Hafiz, matrix number 291379. First of all, for this project, we choose two companies which is Tafi Industri Berhad and Tongher Resources Berhad. Tafi Group was publicly listed on Bursa Malaysia Securities under Tafi Industri Berhad in 2005. The group is principally involved in the manufacturing and trading of furniture for export and local market, and has also diversified into property development and construction related businesses. Tafi Industries Berhad is an investment holding company which is engaged in the provision of management services. The company operates in a single industry in the business of manufacturing and marketing of furniture products.
Second, we choose company Tongher Resources Berhad. Tongher Resources Berhad was established by the Tong Group. Tong Group is the international stainless steel fastener manufacturing group with several manufacturing based in the three places, which is Malaysia factoring in 1989, Thailand factoring in 2005, and China. Tongher, which is Malaysia factories, involved for manufacturing stainless steel fastener such as bolt and screw, nut, starter bolts, and threaded rod. Tongher are widely used in many different industries, including solar energy industry, the petrochemical industry, food machineries, and others. In addition to offering their customer the up-to-date manufacturing, this company, which is Tongher, also offer the best management experience and the concept of customer service to their customer.
First, we will discuss about liquidity ratio. Liquidity ratio are a crucial class of financial measure used to assess a debtor capacity to settle current debt commitments without the need for outside funding. The current ratio and a quick ratio are only a few examples of the indicators used to calculate liquidity ratio, which gauge a company's capacity to pay debt and its margin of safety. So next, the current ratio. The current ratio is a liquidity ratio that is used to calculate a company's ability to meet its short-term debt and obligation, or those two, in a single year using assets available on its balance sheet. So for the formula for the current ratio is current ratio equal current asset divide current liability. For company 1, Tafi Industri Berhad, the amount of current asset that we get from statement of financial position is 593,718 divided into a current liability which amount to 140,1820 equal to, and we get 5.171. While for the second company, that is Tongher Resources Berhad, the amount of current asset that we get from statement of financial position is 7,574,000 divided into the current liability which amount to 148,000 equal to 51.176. So what I can conclude for the current ratio part is that a company with a current ratio of less than 1.0 often lacks cash to cover its short-term debt if it has to be paid in full, while the current ratio is more than 1.0 indicates that the company has the financial resources to remain solvent in the short term. So now we can see that both companies have a total current ratio that extends 1.0, and this indicates that both companies have good performance. But when compared between Tafi Industri Berhad and Tong Her Resources Berhad, Tong Her Resources Berhad has more stable financial resources, considering the value of the current ratio is higher than Tafi Industri Berhad.
Next, quick ratio. Quick ratio measures a company capacity to pay its current liabilities without needing to sell its inventory or obtain additional financing. The quick ratio is considered a more conservative measure than the current ratio, which includes all current assets has coverage for current liabilities. Formula for quick ratio is quick asset divided current liabilities. To calculate quick asset, total current asset minus inventory minus prepared expenses. So for the first company, Tafi Industri Berhad, to find the quick ratio, we must find the quick asset. So based on the statement of financial position, the total current asset is 593,718 divide current liabilities 114,820 equal to 5.171. So for the second company, Tong Her Resources Berhad, we also use the same formula. Based on the statement of financial position, cash and cash equivalent is 7,551,000 plus receivable 2,000 equal to 7,553,000. Quick ratio for Tong Her Resources Berhad is 7,553,000 divide current liability 148,000 equal to 51.034. According to our estimate, we can see that Tong Her Resources Berhad has a quick ratio value of 51.034, whereas Tafi Industri Berhad only has a quick ratio of 5.171. This demonstrates that in contrast to Tafi Industry, which may not be able to pay off its existing obligation using only quick asset, because its quick ratio is only 5.171. Tong Her Resources Berhad has the potential to satisfy its debt more quickly.
Activity ratio. Activity ratio useful when comparing two companies. They are rival in the same industry to determine how the one business stack up against its competitors. However, activity ratio can also be used to treat change over time in the company financial performance throughout a number of recording period. This data point can be used to make out a corporation potential performance. Total asset turnover and account receivable turnover is the example of the activity ratio. Total asset turnover. So, total asset turnover is to measure the value of the company's sale relative to the value of the asset. The total asset turnover can be known how efficiently the company used the asset to generate the revenue. The highest of asset turnover ratio means the more efficiency the company generating the revenue from its asset. But if company get the lower asset turnover ratio, it will be the opposite. So, how to know? We need to calculate using formula of net asset divide into average total asset. So, let me move to the first company, which is Tafi Industri Berhad. Firstly, we need to determine the amount of net sale. Net sale we can obtain in Tafi statement of profit or loss and others comprehensive income. As we can see, the amount of net sale is 120,000 ringgit. Second, we need to determine the amount of average total asset. To find the answer, we need to see the total asset for the year 2021 and 2020. So, total asset for the year 2021 is 70,04,457 ringgit, while for the year 2020 is 44,073,645 ringgit. Next, we plus the answer of the total asset for the year 2021 and 2020 that we'll get and divide by 2. So, 57,039,051 ringgit will be the average total asset for Tafi company. Last step, the amount of net sale we divide by the amount of average total asset. 120,000 divided by 57,039,051 ringgit. So, total asset turnover for Tafi Industri Berhad is 2.104. Next, we move to the company Tongha Resources Berhad for the same calculation. Net sale will be get in the statement of comprehensive income for the company Tongha, which is 18,452,000 ringgit. Second, we find the average total asset. We need to calculate manually in Tongha's statement of financial position to get the amount of total asset for the year 2021 and 2020, because this company not given the direct amount of total asset. So, the method we use is current asset, we plus with non-current asset. Let's we see for the year 2021 first. Amount of current asset is 7,574,000 ringgit plus amount of non-current asset is 190,233,000 ringgit. So, equal to 197,807,000 ringgit. While for the year 2020, the amount of non-current asset is the same amount like 2021, which is 190,233,000 ringgit. We plus with amount of current asset is 20,397,000 ringgit. So, the answer is 210,630,000 ringgit. Next, for the both answer, we plus and divide by 2. So, as the result, 204,280,500 ringgit will be the average total asset for the Tongha company. So, last step is we follow the formula which is net sale divide average total asset. So, 18,452,000 ringgit we divide by 200, 4,218,500 ringgit. So, the answer is 0.09 will be the total asset turnover for the Tongha Resources Berhad. As the result for comparison, we can see that Tafi Industri Berhad has the greatest total asset turnover ratio, which is 2.104, compared to Tongha Resources Berhad only get 0.09. This illustration can see how Tafi Industri Berhad can create income more effectively by utilizing its own asset.
Next, I will explain about account receivable turnover. Account receivable turnover is one of the ratio under activity ratio. It calculates how frequently a company collects its typical account receivable balance. It measures how well a company is able to manage its line of credit process and collect past due amounts from customer. So, this is the formula of account receivable turnover. Account receivable turnover equal to net sales divided with average trade receivable. So, what is average trade receivable? Average trade receivable is the length of time it takes for a company to obtain account receivable payments due from its clients. To compute average trade receivable, the formula is average trade receivable equal to account receivable for current year plus account receivable for previous year divided with 2. So let's calculate the average trade receivable for Taufik Industri Berhad first. So let us take a look at statement of financial position for Taufik Industri Berhad. As we can see, the amount of account receivable for year 2020 is equal to 4,884, while for year 2021, account receivable is equal to 45,118. So, we will add the amount of account receivable for year 2020 with the amount of account receivable for year 2021 and divide it with 2. After we do the calculation, we will get the amount of average trade receivable equal to 25,001 ringgit. Next, we will proceed to calculate the amount of account receivable turnover. Account receivable turnover is equal to net sales divided with average trade receivable. So, let us take a look at statement of profit and loss and other comprehensive income for Taufik Industri Berhad. So, this is statement of profit or loss and other comprehensive income for Taufik Industri Berhad. As we can see, the amount of net sales or revenue is equal to 120,000. Then, we will put the amount in the formula, which is 120,000 will divide with amount of average trade receivable, which the amount is 25,001 ringgit. And then we will get the amount of account receivable turnover equal to 4.8. Next, we will calculate the amount of average trade receivable for Tong He Resources Berhad. This is statement of financial position for Tong He Resources Berhad. As we can see, the amount of account receivable for year 2020 equal to 11,642,000, and the amount of account receivable for year 2021 is equal to 2,000. Next, to calculate average trade receivable, we must add both value and then divide it with 2, and we will get the amount of average trade receivable equal to 5,822,000. Next, let us look at statement of profit or loss for Tong He Resources Berhad. The amount of net sales for Tong He Resources Berhad is equal to 80,452,000. To calculate account receivable turnover, we must divide the amount of net sales with the amount of average trade receivable. So 18,452,000 will be divided with 5,822,000, and then we will get the amount of account receivable turnover equal to 3.170. So, an efficient company has a higher ratio, whereas an inefficient company has a lower ratio. Based on our calculation, Taufik Industri Berhad, as we can see, has a higher ratio value of 4.8, which demonstrates that this business is particularly effective in collecting account receivable from its customer, while Tong He Resources Berhad has lower ratio rating at 3.170, indicates that their business is still inefficient at managing accounts receivable for clients.
Next, profitability ratio. Profitability ratio are a type of accounting ratio that helps in determining the financial performance of business at the end of accounting period. Profitability ratio show how well a company is able to make profit from its operation. Profit margin is a ratio of a company profit, sale minus all expenses divided by its revenue. The profit margin ratio compares profit to sale and tells you how well the company is handling its finance overall. It always expressed as a percentage. To calculate profit margin on sales, net income divide net sales. Based on the statement of comprehensive income for Taufik Industri Berhad, the net income is negative 1,093,812 divide net sales
120,000 equal to negative 9.115%. For the second company, Tong He Resources Berhad, the net income is 17,905,000. Divide the net sales 80,452,000 equal to 0.97%. As we know, the higher your sales margin, the higher your potential for profit on that product or service. Based on the profit margin comparison between Taufik Industri Berhad and Tong He Resources Berhad, we can see that Tong He Resources have a higher profit margin, which is 0.97% compared to Taufik Industri Berhad, which has a deficit profit margin. So basically, Tong He Resources make a better profit margin ratio. That means their company business does well at managing their sales costs.
Okay, I will proceed with the calculation of return on asset ratio. Return on asset ratio is under profitability ratio. It is a financial ratio that measures a company's profitability in relation to its assets. Return on asset can be used by corporate management, analysts, and investors to assess how effectively a company uses its resources to make a profit. This is the formula for return on asset. Return on asset is equal to net income divided with average total assets. So to get average total asset, the formula is total asset for current year plus with total asset for previous year, and we will divide it with 2. First, let's calculate return on asset for Taufik Industri Berhad. Before that, let's take a look at statement of financial position of Taufik Industri Berhad. As we can see, the total asset for year 2021 is equal to 70,457 ringgit, while total asset for year 2020, the amount is 44,073,645 ringgit. So to calculate average total asset, we will plus both amount and then divide it with 2. Then we will get average total asset equal to 57,039,051 ringgit. Next, we will proceed to the calculation of return on asset. To calculate return on asset, we will divide net income with average total asset. Let us take a look at statement of profit or loss and other comprehensive income for Taufik Industri Berhad. So, Taufik Industri Berhad is having loss. So, the amount of net income is equal to negative 1,093,812. We will use this amount in formula return on asset. So, to get return on asset, negative 1,093,812 ringgit will divide with average total asset amounted 57,039,051 ringgit. Then we will get the amount of return on asset negative 0.019. Okay, let's proceed to the calculation of Tong He Resources Berhad. First, this is statement of financial position for Tong He Resources Berhad. So, as we can see in this statement of financial position, they do not give the amount of total asset directly. So, we have to add non-current asset with current asset. After we add both value, we will get the amount of total asset for year 2021 is equal to 197,807,000. And for year 2020, the total asset is amounted 210,630,000. To calculate average total asset, we must add both value of total asset, then divide it with 2. So we will get average total asset amounted 204,218,500 ringgit. Next, we will calculate return on asset. The formula of return on asset is net income divided with average total asset. Let's take a look at statement of profit or loss for Tong He Resources Berhad. As we can see, the amount of net income is equal to 17,905,000. we will divide this amount with average total asset, which is 204,218,500 ringgit. Then we will get return on asset equal to 0.088. So, the return on asset ratio is frequently represented as a percentage using the net income and average assets of the corporation. A company's ability to manage its balance sheets to produce profits is more effective and efficient when its return on asset is higher. On the other hand, a lower return on assets suggests there is a potential for improvement. As we can see, Tonghe Resources Berhad has a higher ratio value of 0.088 when compared to Tafi Industry Berhad's only negative 0.019 return on asset. This demonstrates how Tonghe Resources Berhad produce more profit in a more effective and efficient manner.
A leverage ratio is one of many financial metrics that examines the amount of capital that is borrowed in the form of loans and evaluates a company's capacity to pay its debt. Because business typically employ a combination of debt and equity to fund their operations, the leverage ratio category are crucial. Knowing how much debt a company has can help determine if it will be able to pay off its loans when they are due. Debt to asset ratio is a leverage ratio that indicates how much debt a company has overall in comparison to its assets. Analysts can compare the leverage of one firm to that of other companies in the same industry using this statistic. This data may reveal a company's level of financial stability. The formula for this ratio is debt to asset ratio equal total liabilities divided to total asset. For Tafi Industry Berhad, we calculate the total liabilities is 125,350 divided to total asset 70,004,457 and we get 1.791. After that, for Tonghe Resources Berhad, total liabilities is 148,000 divided to 197,807,000 equals to 7.482. If the debt to asset ratio is greater than 1, a business has more debt than assets. If the ratio is less than 1, the business has more asset than debt. The higher the ratio, the more leverage there is. And as a result, the riskier it is to invest in that company. It shows the amount of debt required to support a company's asset as well as the potential usage of those assets for debt repayment. As a result, it calculates the level of leverage for a company. Thus, a company with high level of debt might have a harder time surviving a recession than one with below level of leverage. In this regard, it is clear that the Tonghe Resources Berhad has a greater debt to asset ratio, which is 7.482, than Tafi Industry Berhad, which is 1.791. Investing in Tonghe will carry a greater risk than doing so in Tafi Industry Berhad.
Next, debt to equity ratio. The debt to equity ratio, which measures a company's financial leverage, is determined by dividing its total liability by the value of its shareholders. The debt to equity ratio is a crucial indicator in corporate finance. It gauges how much debt a business is using to fund operation as opposite to using cash on hand. A specific kind of gearing ratio is the debt to equity ratio. So, the formula for the debt to equity ratio is debt to equity ratio equal total debt divide on equity. So, for company 1 Tafi Industri Berhad, the amount of total debt that we get from statement of financial position is we take amount total liabilities, which is 125,350 divide into owner equity, which amount is 69,879,107 equal to 1.794. While for the second company, that is Tong Her Resources Berhad, the amount of total debt that we get from statement of financial position is we take amount total liabilities, which is 148,000 divide into owner equity, which amount is 197,659,000 equal to we get 7.488. So, what I can conclude for the debt to equity ratio section is that a larger debt to equity ratio among companies of a comparable size denotes greater risk, while a particularly low ratio could mean that a company is not utilizing debt funding to grow due to the higher risk associated with long-term debt compared to short-term obligations. Investors frequently change the debt to equity ratio to just take that into account. So, Tong Her Resources Berhad reports a higher debt to equity ratio of 7.488 because a higher debt to equity ratio implies a significant level of investment risk. It is clear that Tong Her Resources is dependent on debt financing to keep the business afloat. For Tafi Industri Berhad, however, the risk is still present but at a minimal level as the ratio is only 1.794.
The conclusion that we can draw from the calculation of these two companies, we can see that Tong Her Resources Berhad have a stable financial compared to Tafi Industri Berhad. Even though Tong Her Resources Berhad has excessive debt, but Tong Her Resources Berhad has a good performance in liquidity ratio and profitability ratio, which means their profit can cover their debt. In addition, based on statement of profit or loss and other comprehensive income of Tafi Industri Berhad, we can see that the company is deficit because they do not earn any profit but they suffer a loss. That's all from our group. Thank you for listening.